time. What is it that is causing or spooking the D Street and the investors right now? That's something that we will focus on. And how should you be really approaching some of the stocks that are either bleeding or surging in trade today? We'll also be joined by an expert, but first up, a quick check on how the markets are trading at this point in time. Look at the Sensex right now. It's almost a 1,000 point cut that you're looking at on the Sensex. A sharp fall right there, 59,225. That's the level at which the Sensex is trading at, down by 1.6%. Talk about the Nifty 50 as well. 323 points gone there. 17,567. That's the level at which the Nifty 50 is also moving down. 327 points and about 1.8% lower in trade. And also let's look at the broader markets. Well, you can actually see a sharper fall in the mid and the small caps. They are facing the brunt today. 2.5% downtick for the mid cap 100 index. And the small cap 100 index is even lower at 2.6% cut, 9,172, the current level for this one. The other index that I want you to really focus on, viewers, today is the India VIX. Look at the sharp surge there, 21.3%. 17.7, the current level for the India VIX. That's something that you need to continuously watch out for. The market breadth clearly in favor of the bears, with 40 declines, with 10 advances as far as the Nifty movers are concerned. In terms of the sectors, all the sectors barring the FMCG and the pharma are down in the red. Sharp fall being seen in the PSU banks. That's the index that's pulling down the overall Nifty bank. 6% lower for that one today. Almost 4.6 or 5% down for the metals pack. The realty is seeing some cuts too. Apart from this, financial services are down in trade. The IT stocks are slightly lower in trade as well. But some of the biggest losers or laggards, PSU banks, metals, the biggest culprits in today's trading session. Of course, apart from that, it is the Adani Group stocks that have seen a sharp fall right there. Look at the Nifty losers. You do have Adani Ports down 20%, Adani Enterprises down 15%. Apart from this, it's SBI that's down by 5% odd as well. In terms of the other losers, BPCL, ICICI Bank, Axis Bank, all of them seeing cuts of 3 to 4.5% in trade today. Hindalco, ONGC, IndusInd Bank, the other losers in trade. Far and few between stocks, if you can see, which are holding up or stemming the kind of a fall for the markets today. Some of those auto majors, Bajaj Auto up 6%, Tata Motors up 5%, Dr. Reddy is up in 3% as well, ITC, HDFC Life, some of these movers that are not disturbed with the overall fall in the markets right now. Let's welcome our guest for the day. Rahul Shah joins in. He's the Vice President Equity Advisory at Motilal Oswal Financial Services. Welcome, Rahul, and thank you so much for taking the time out. 1,033 points gone there for the Sensex. What is really causing this kind of a rout? Is it just the Adani fares or something else as well that's really going to be an indication of a sharper fall perhaps coming in going forward?
Hi, good afternoon. I think yes, the markets have been have been hammered since last 2 3 days. If we look at it, I think obviously one or two reasons is obviously was an FNO expiry before just the budget. So I think a lot of the guys who are long on the markets would like to go light before the budget, a big event which is coming up. So a lot of expectation building for this budget as well. So I think that is one factor. And secondly, I think obviously this the report coming up for against the Adani talking about it, and I think and we've been seeing in the last 2 days. I think the stocks of Adani Group been hammered left, right, and center. I think that is also one of the reasons, and people just the views are getting just viral, and people are just hammering it. So I think
Sure.
if you look at it, the short sellers are on the upper hand at this juncture. And thirdly, I think if we look at it, I think way the things have been, and the FI has been pulling out money since if we look at Jan, if we see the numbers have been very muted and negative, if I look at it. And fourthly, I think way the other global markets have started moving up. I think usually that's the phenomena where their market starts doing well, then I think we see some kind of an outflow from the domestic markets like India or emerging markets. And one more thing interestingly to talk about it, I think, is like if you look at an emerging market itself or an Asia perspective itself, I think we've seen Hong Kong moving up 15% in last 2 months or so, 15% plus, and this markets have done nothing. And the valuations are much more cheaper than what it is. And then
Right.
obviously the things coming up from the China talking about opening up of the overall economy. So I think all these results, things have been fueled, positive for the other markets and then India. And most importantly, I think the valuation perspective, we've seen Nifty reading at last 10-year average 19 plus. So I think that's also we've been wherever we talk about it. I think the valuation wise, we are I think valued perfectly.
Correct. So what as an strategy are you really advising to all the investors at this point in time? What should they be doing? I mean, is it a time to just wait and watch, look at the screen and not do anything with your portfolio and the stocks that you hold? Not either buy or sell at this point in time, just look at the screen and keep watching? Or is there anything else that you really feel that these dips could also be bought into? Because, so far in 2022, whenever we've seen sharp falls, the next day or a day or two later, we've actually seen the markets really bounce back. What is the sense that you're getting right now? Will this dip also be bought back as well in the markets?
One thing is simple. What I feel is, I think obviously wherever we see the Q3 numbers, a lot of companies reported their large space numbers. Large cap companies have reported their numbers, and numbers have been better than or in line with what the street was estimating. So a lot of companies, like for example, financials. If we talk about HDFC, Kotak, ICICI, all three stocks have been hammered from their peaks. If I look at it, ICICI being the most. If I look at the all-time high of ICICI 950 or 960 levels, and we are today at 830, below 830 and odd levels. If we look at Axis, if we look at Kotak, all of them banks have been hammered. And if we talk about it, I think we are seeing an upswing in the credit cycle. So in last 10 years is one of the best year in terms of the credit cycle, what we've been seeing. NPA is under control. Things have been much better. The credit growth picking it up. So I think that sector, I think one should look at it. I think one should keep adding at this juncture. Secondly, if I play the broader theme, I think again, we talk about the cement companies. Cement companies, I think Ultratech reported their numbers. The numbers were, I think, in line with slightly below estimates of what we've been talking about.
Yeah.
So I think that is one of the things. I think the stock has also been hammered quite substantially from there. So I feel that here again we have to look at it. I think to buy such companies and keep on adding at it. Thirdly, I think
Right.
the thing we should be avoiding is that the high P stocks. I think if you look at the trends in last 6 to 8 months, I think we've been seeing that the stocks with higher valuations have been just been hammered left, right, and center. So I think that's one thing, and I think that theme should continue still going forward as well. And markets is taking where you have seen that the valuations are comfortable and people are shifting, taking the bets on those things. So I still feel that high value stocks, high valuation stock, one should still exit. Even if the markets have corrected, we should take exit and just shift to the stocks which I've been mentioning, where the valuations are comfortable and there's a visibility of growth.
Okay, understood that. Let's also take these individual pockets to understand what should be investors' approach to those. You did mention that Adani Group stocks have been in a free fall as the spat between Gautam Adani's group and the US activist investor Hindenburg Research have actually are looking at a legal turn now as well. Your thoughts on the kind of fall that we've seen on the group stocks now? Does it make sense for investors who've been waiting out for some kind of a correction to get into these stocks? Can this be a good entry point, or could their things actually turn out for the worse and it's better to stay away from the Adani Group stocks right now?
So there are two things to it. One, we don't cover any of the stocks, so it would be difficult to comment on this, any of the Adani Group stocks. But interestingly, because of the fall in the Adani Group stocks, we've seen the same impact in a lot of other stocks have been hammered left, right, and center. So there, I think there's an opportunity to build it up for this thing. So if you ask me, as I mentioned about ICICI Bank, if let's look at SBI, been hammered 15% from the near-term high. So I think these are the stocks one should look at it. I think they've been unnecessarily hammered, which I feel this is, look at Kotak. Stock has been down 10%. So this is one of the stock. The numbers were quite strong. So
Sure.
I feel that I think financial looks quite interesting. Secondly, I think Ultratech. I think stock has been hammered left, right, and center. The 8-9% down from post results. So I think here also Q4 should be good numbers for the Ultratech as they have guided. Secondly, I
Yeah.
think they've also guided for a capacity utilization going higher from the 83% from the current time. So I think they will reach, I think, 90% kind of the guidance what the management is talking about. So I feel that select pockets, large pockets, I think large cap stocks, one there's an opportunity in such sell-off, one should keep investing in that. That's what my stake is on this markets.
Okay, understood that. What about some of the other stocks that are buzzing in trade? In fact, Tata Motors, for example, surged about 7% intraday. The company posted a consolidated net profit of 3,043 crores in Q3 after clocking in losses for 7 straight quarters. How are you approaching Tata Motors as a stock?
I think if you look at December, they posted monthly sales number were robust. Post that we got a re-rated and the stock started moving up. The numbers, again, the quarterly performance was also better than what Street was estimating. So I think this is one of the things. So I think that's the reason I think Tata Motors. And if we see same thing versus Maruti also, the numbers were
Yeah.
better than what Street was estimating and the stock started moving up. So this all the factors wherever the numbers are better or opportunity is there, I think one should start looking at it.
So between Maruti and Tata Motors, which would be a preferred pick right now?
Both the stocks I would recommend. Both the one in passenger and one in the global play.
And
Both
what
the
about,
stocks I would recommend.
okay. What about Bajaj Auto then? That stock is the top mover on the index today.
So I feel that two-wheelers have done nothing in last 6-8 months if you look at it. So my preference in that two-wheelers would be Bajaj and Eicher. So I think
Okay.
both the things, both the stocks we should look at it.
The other stock that has been hammered, you did talk about some of the heavyweights that could perhaps be looked at as a fresh entry point. But what about stock like Dixon Technologies? This stock has crashed 20% today and after, also hit a 52-week low of 2690 or so. And that is after reporting the disappointing set of earnings for the third quarter as well, and also slashing the revenue growth guidance going forward from here on. How have you read the earnings of Dixon Technologies? And going forward, is there a case for investors to really relook at in case they have this stock in their portfolio?
I think I would avoid Dixon at this junction. So my broader theme is that I mentioned it that I think wherever the valuation comfort is not there, so maybe the short term there could be a pain in such kind of a stocks. So I think where we need to be where the market is. The market is clearly showing that a trend that where I think valuation comforts are there, those stocks have been rewarded. So prima facie, if you look at, I think PSUs were in favor in last 6 months. So I think wherever there is a discomfort in valuations, I would avoid. And obviously Dixon also, I think very richly valued at this juncture, so I would avoid Dixon as well.
Very importantly, you mentioned PSU banks. Look at the index, it's down by 6% odd. So all those investors who had these stocks in their portfolio were looking at these incremental gains. What's the best strategy for them? Even if there are lesser profits now, should they exit it at this point in time or again wait it out?
I think I feel that they should still continue to hold on, and this are the opportunity to get into this thing. PSU banks, the stocks have beaten down anything between 15 to 20% from the recent highs. And I think the numbers that Canara Bank reported, Bank of India, Union Bank, all of them had a blockbuster numbers, which I feel is. So I would continue to hold on to or advise investors to add PSU banks in their portfolio.
Okay, and what's the pecking order that you would have here in PSU banks?
I think State Bank remains my top bet. State Bank's number one, followed by Canada and Bank of Baroda.
Okay, well noted that. Thank you so much, Rahul, for sharing with us all your thoughts in these individual stocks and
My
the
pleasure.
market movers at this point in time. We'll quickly look at how the markets are trading at this point, and then before we wind down the show, 1,000 points gone for the Sensex, 59,205, 17,562, the current print for the Nifty right here. The screen definitely does not look good at this point in time. 2.5 hours to go, but there are hardly any signs of any bounce back or a major recovery from the lowest point of the day that you can really expect, because the markets are still looking a lot under pressure. Of course, all the pockets are largely under pressure. Heavyweights, the Adani Group stocks, reasons have been pointed out by Rahul, but we'll keep an eye out on how the markets move forward from here and continue to get you all the expert views as to how should you be approaching the markets at this point in time, in which we have seen some sharp fall in today's trading session. So do stay tuned on to Business Today TV to catch all these latest updates from the world of stock markets, and also stay engaging with us. You can continuously engage with us via our other social media platforms, Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.